Right. Jimmy, I can't hear.
Okay, Harit Shah is well in the line with us. Harit, hi, evening. How are you analyzing Infi's numbers? All the data points that we are picking up from the press release right now seem to be indicating that this is yet again a blowout set. The digital revenues as a percentage of total revenues now are at 47.3. They seem to have cracked the code.
Yeah, good afternoon. I think, very good set of numbers. Nothing, apparently, at least on the face of it, to complain about. Revenue was, 4% in CC terms. So I think state was expecting about 2.5 to 3% somewhere in that range. And deal wins have been also very healthy, $3.15 billion. I think that is the deal win that they've achieved in this particular quarter. So I think that is again a very good reflection of healthy underlying traction that is being witnessed. So very good, very rapid recovery after a tough first quarter, due to the COVID-19 impact. So yeah, I mean, and of course, I think the EBIT margin is, I think that was a very, very strong, positive surprise that, we were expecting about 30 to 40 basis points kind of improvement, but I think they achieved 250 to 60 basis points improvement. So yes, I think very clearly, there will be some revision across the state on this particular aspect, both on the revenue and the margin front. Similarly, even in the case of TCS, the same thing was witnessed, and Infosys is also going, they're going through the same, upward revision in estimates for Infosys going forward. So yeah, I mean, the two bellwethers of the industry have, completely blown out, estimates across, compared to what people were expecting. And yes, of course, we do have a positive rating on the sector at the moment. So I think these three companies that have announced results so far, including Wipro, I think there's no reason to change that stance at the moment.
Also very positive management commentary coming in from Salil Parekh, Praveen Rao as well as Nilanjan Roy. So if you look at what Salil Parekh has said, he said our second quarter performance is a clear reflection of our ability to help clients on their digital transformation journeys. Our digital and cloud capabilities combined with intense client relevance are helping us achieve differentiated results in the market, as is visible in 2.2 year-on-year overall revenue growth and 25.4% from digital offerings. And if you look at the COO, he's also said that the strength and resilience of Infosys was fully visible in Q2, with operating metrics witnessing a healthy increase and the Infosys seeing broad-based growth. And Nilanjan Roy, the CFO, is also talking about how free cash flows grew significantly and how they were able to improve on margins. So whichever way you look at it, be it revenue, be it margins, be it the revenue guidance number which was being looked at, this is a beat on all fronts. We also have Sandip Agarwal from Edelweiss Financial Services. Sandip, this is the third IT company to post results that are ahead of street estimates, be it on revenue, margin. For Infosys, the focus was on annual guidance. What do you make of these numbers? During the quarter, we heard Nandan Nilekani say that Infosys is becoming the bellwether again. Would you perhaps agree with that assertion when you look at the numbers today, when you look at the forward-looking commentary from the management?
So, I think I am still not able to believe the kind of margin expansion which they have reported. My most aggressive estimate for FY24 margin for Infosys was also at 24.4%, and they have done 25.3% in this quarter itself. So, I don't know how to, understand this number. It is a blockbuster number to say the least. And I can only say the large deal signings and commentary from TCS, outsourcing growth of Accenture, everything very clearly in open broad daylight. It is loudly telling that we are on a multi-year technology revolution, and it cannot be louder than this in my view. And this is a wave, and it is a very, very big wave in my view. All parameters are blockbuster. That is all I would say.
Right. Harit, if I can come back to you, I'm just going through the business segments and they've improved on everything. So compared to June and September, financial services, retail is flat. Communication is down, energy and utilities is flat as well, manufacturing is flat, but broadly this seems like broad-based growth. Their digital numbers are looking good when compared to the core numbers, and Europe is flat, North America has actually declined quarter on quarter, but the rest of the world has improved. So these are some of the segment-wise performances that we are seeing from Infosys. They have announced a large deal win. They are saying $3 billion. Remember, they had announced Vanguard during the quarter. So what do you think is working for Infosys, Harith? Is it the investments that they have been making in the last 2 years? In this quarter, they have also announced 3 acquisitions in the digital space. So what do you think is working for Infosys, and is this going to continue for the rest of the year as well, for the second half as well? Or, are these sort of pent-up demand that's getting reflected now? What's your take on these numbers and the forecast for the next couple of quarters?
Yeah, so I think ever since the current CEO has taken over in January 2018, he has definitely, pivoted a lot towards, increasing aggression on the sales side, especially on the large deals front. And that, you see, has been reflected over the last more than 2 years or so in terms of, every quarter, the kind of deal wins that he's been, recording in terms of the new deals. So that is one of the, and of course, I think this also has shifted, in terms of maybe what was a slightly productized services model under Vishal Sikka, that has changed a bit more towards, going back to the core. And, obviously investing in capabilities on the digital side and things like that, that has been something that everybody has had to do. And then Infosys has done it, to the extent that they're required to do it. So I think that has definitely been some of the major drivers for the company. And, clearly they are very well positioned to take advantage of any uptick in IT spend. We've seen that this quarter, and certainly in FY22, you should see a fairly comfortable double-digit growth recorded by Infosys as well as TCS. I think that should not be any problem now, especially given the robust, momentum we are seeing right now, which should probably result in a very healthy exit rate.
Just come to me for this one.
Hello.
Interestingly, Infosys is also the third IT company to go ahead with promotions and salary hikes. So good times indeed are back. They are rolling out salary hikes and promotions effective January 1st. TCS had announced this, Wipro had announced it. So it certainly looks like good times are back. They are also going to pay out 100% of the variable payout. And this is actually something that we had asked Infosys CEO Salil Parekh about during the quarter on what they are going to do with respect to promotions and salary hikes. He said that they will take a call by the end of September. So they've decided to go ahead as well. So whichever way you look at it, revenue, margins, deal flow, hiring, hikes and promotions, from all these angles, it certainly looks like the momentum is back for Infosys and the IT sector. Trip, what is your take? Are we going to see this, sustained, because people are talking about a multi-year technology transformational cycle? Are Indian IT companies well placed to capture and build and leverage on this momentum?
Indian IT services have really taken the COVID as an opportunity, and they are really accelerating the digital transformation that started a few years back, but today it has become mainstream, and Infosys has put its resources, including acquisitions and capabilities, to really harness this opportunity. Secondly, regarding the margin expansion, I think it will expand even further, because in the new world, which is post-COVID, physical presence is optional. So basically what's happening is, in this environment, the sales cycles are done remotely, the servicing is done remotely, you don't need to travel. When you don't need to travel, your operating margins go up. Secondly, the customer, the way Infosys wins deals today is through incumbency and expanding portfolio. And with the strong presence Infosys has had with various customers over the last 20 years, getting the deal as an incumbent is easy. Delivering on the services is through contactless, that is through remotely. And in a world where physical presence is optional, the operating margin for almost every Indian IT services company is going to expand, and it is just the beginning. You can see the operating margins to go in the range of 26% over the next 2 years.
Sure. Harit, while there's no taking away from the fact that these are a blowout set of numbers, the management commentary is strong, the guidance has been revised upwards, and there's no taking away from the fact that if you've got to ride the market momentum, you've got to be positioned in IT. But the fact of the matter is also, Harit, that IT is a well-discovered story. Look at where the Infi stock closed today, even though you had some profit-taking set in the IT names. It was still on closing at 1138 as opposed to the 52-week high on the stock of 1166. So we are pretty much close to the 52-week peaks. Do you think Infi come tomorrow is going to play out like a Wipro kind of story? Buy on expectation, sell on news? And in the near term, is all the positive baked into the stock prices already?
Yeah, so I would say this is kind of pacing growth, I would say, in a sense. So essentially what stocks that typically command high P multiples, they tend to do so with fairly solid rational, and we've seen that happen so often for the last many years with TCS that the stock always looks expensive, but really the street has fairly comfortable with the fact that TCS will perform. Maybe there may be one or two quarters where they may not necessarily have a good performance, but they are willing to discount that. So I think that is what this whole thing is a reflection of that. Now I think the street is definitely willing to give benefit of doubt to these companies, and they're willing to take a slightly longer term view rather than a short term kind of 1 quarter phenomenon. I think that is definitely a good sign for the company, especially given commentary that we've seen from TCS, Wipro, and now even Infosys in terms of the possibly next 2 to 3 years strengthening of demand. I think that definitely something which will continue. You may still see some sort of correction at higher levels, but then eventually, given the fact that we are in a strong demand cycle, you will probably see people accumulating at low levels whenever you see a correction, and we will go back to even higher levels from there on. So I think this is how I would look at it at a broader level.
Trip, if indeed there is a correction that does set in, and I say a big if, at 1100 thereabouts, would you be tempted to add more to your long-term holding on Infi?
Definitely, I would say if there's a correction, not a correction. The idea is the world economy improving? Answer is yes. Is Infosys best positioned in terms of its capabilities to take the benefit of the opportunities that a post-COVID era presents them? Answer is yes. So, and is the best yet to come? Answer is yes. So what does it mean? If you're a long-term holder and not a trader, Infosys stock goes up from these levels easily. So you should be buying Infosys for the fundamentals which have turned around positively. Secondly, the margin expansion will happen. Thirdly, there's a complete sync between what the market demands and what Infosys has. One trend which is now evolving in addition to digitization is application modernization. That means getting people to cloud native environments. And Infosys and other Wipro, TCS, all are very well positioned to do that. And the last thing I will mention is there's a new industry which is also emerging, which is called process mining. Right now, Infosys made an acquisition, but they haven't harnessed that completely new market, which is called process mining, which will be very significant in 2 years from now. So the best is yet to come. And if you are a long-term holder, this presents the current price of Infosys stock price presents a very good opportunity to long-term investors to hold and buy more Infosys stock.
Sandip, are you going to be tempted to revise the price targets even further on Infi, or does it continue to be a hold? Sandip? Okay, we seem to have snapped that line. My colleague Poonam Sani as well joins in back, and I think she has more details on Infi's numbers. Poonam?
In fact, Aisha, I guess we have covered most part of the results. In fact, what I was actually searching for any intimation in terms of buyback or buyback there, but no, it isn't. But having said that, it's a blowout number, Aisha, across all fronts, with the guidance also revised upwards significantly for the operating margin guidance at 23 to 24%, and even the revenue growth guidance. In fact, I just had one question for Harith, and that was the fact that given the fact that Wipro as well as TCS have announced buyback in order to reward shareholders, there isn't any mention of that in the press release by Infosys. Are there still expectations on the buyback front? Interim dividend is declared at 12 rupees per share. Harith, what are your expectations in terms of capital return policy?
Hello. Hello.
Yeah, Harith, can you hear me?
Yeah, I'm sorry. I'm not. You're hearing very clearly. You were saying about buyback, I guess.
You is, how do you see Infosys in fact rewarding shareholders? Are there any expectations or buyback from Infosys even from here on? How do you see Infosys rewarding shareholders? They have already declared interim dividend of rupees 12 per share.
Yeah, sure. So I think going forward, you will continue to see that a buyback at some point in time. It's very difficult to give any kind of a timeline to these sort of things. It depends on various factors, including the dividend policy, and also
Good afternoon. I trust each of you are safe and healthy. We've had an exceptional quarter in the second quarter across multiple dimensions: client impact, digital scaling,